Welcome to today's episode of Crypto Corner. We'll look at the charts once again. As you know, we are seeing a very bullish sentiment in crypto right now. That was long overdue. Ever since we flipped the 25,000 range into support, things are looking good for Bitcoin. And even though the outs were going down during this last move over the past week, now they're finding some much needed confidence to make up for it. Today we have a lot of altcoins making bold moves on the upside, and the next rally is already in its early stages. So let's see what can we expect for the next week and beyond. Alright guys, let's get started. Welcome to another episode of Crypto Corner with myself, OJ, crypto investor and analyst since 2016. Let's take a look very quickly at what's happening with the altcoins, and of course we're going to go into the chart of Bitcoin to analyze, what is likely to happen over the next few days. Well, today we have some major pumps in Bitcoin Cash and eCash. eCash is a fork of Bitcoin Cash, so it makes sense that both of these are moving up together. In fact, eCash is almost 70% up in the last 24 hours, more than twice bigger pump than what Bitcoin Cash is doing. This is on the back of a listing on one of the big South Korean exchanges. It says here EDX, the digital asset exchange backed by Wall Street giants Fidelity, Citadel and Charles Schwab. The trading activity around this token has surged significantly. I'm not familiar with EDX exchange, but definitely South Korean volume has been driving markets for the longest time. So yet again, we're actually seeing that mainly South Korean volume here is driving this pump. But it's not just these two tokens. For some reason, we have FTT, the former FTX token. I mean, it's still an FTX token. I'm not really sure who's trading this token. Why are people pumping it? I mean, they're trying to revive FTX exchange in some form or other, but I personally would not trust this at all. Litecoin is also pumping 18% in the last 24 hours. We have the halving now approaching really soon. 4 weeks left until the halving of Litecoin, and usually this is when we see the main pumps. Bear in mind, this is not going to last for too long. At most, I'm expecting a couple of weeks of rallying of Litecoin, and then the sell-off will begin. The sell-off will begin before the halving. So if you are trying to play this market and you want to make some quick profits here from the halving of Litecoin, definitely do not wait until the date, and the date is the beginning of August, but already second half of July is when we're going to see a sell-off in Litecoin. So make sure that you don't really hold this. I mean, I'm not giving advice here, but I personally would not be holding Litecoin after the middle of July, because in previous halvings, I've seen what the price action is like, and it's just as I describe it right now. Ethereum Classic is making a decent gain in the last 24 hours, 14%. Maker is making 13% gain. Not bad at all. And in terms of the top coins, according to market cap, Bitcoin is up 1%, Ethereum is up 2%, BNB is 2.5% up, XRP is 2% up, Cardano is 8%, which is actually quite a bigger change here, bigger move from Cardano. Dogecoin is 4% up, Solana 7%, and then Tron 3.71% up in the last 24 hours. BCH, Bitcoin Cash, has managed to actually climb to the 12th ranking here in the market cap ranking because of this pump today. Bear in mind, at this point, it is very risky to be trying to get into BCH, because I feel that this pump is getting exhausted. So I don't really expect it to last for too long. A pullback is definitely coming, and it's coming very soon. Probably in a day or so, we're going to see the correction and the pullback in BCH. So no point trying to catch it as it's already pumped. All right, now let's move on to the charts. But before I move on to the chart of Bitcoin, something very quickly that I want to share with you here. If you're looking to explore other trading opportunities beyond crypto, I highly recommend Ceres Markets. It's a global brokerage that lets you trade more than just crypto. You can explore a wide range of assets like cryptocurrencies, forex, stocks, even commodities, all in one place. One aspect that makes this exchange stand out is that the company is regulated by the Labuan Financial Services Authority in Malaysia. What I mean is, this is a compliant company. There is no risk of being dragged into uncertainty like what we have with Binance US right now. And something that I really like about Ceres Markets, it's zero fee trading offered by them. This means you can trade cryptocurrencies against some of the world's largest companies, such as Tesla, Apple, Google, Adidas, Disney. Just look at how many stocks are paired against Bitcoin, for instance. And then there are Ethereum pairs as well. There are Litecoin pairs as well, and equity indexes like Nasdaq, S&P, and others, and even commodities like gold, silver, and crude oil. All of these paired against cryptocurrencies, and more importantly, without any fees, with over 200 instruments paired with cryptocurrencies through non-deliverable contracts, NDCs, and leverage of up to 100 to 1. You have the flexibility to make both long and short positions on any cryptocurrency. And to make trading even more convenient, Ceres Markets provides a mobile app that I highly recommend using. This app is available for both iOS and Android devices, allowing you to buy and sell cryptocurrencies quickly, easily, on the go. Whether you are traveling or simply away from your computer, the mobile app ensures that you have access to the markets at any time. And personally, I found mobile trading apps to be really invaluable for monitoring my positions because I'm traveling so much. Also, I execute trades. They make it easy to take advantage of opportunities as they arise. And I travel all the time. I've been using these mobile apps a lot in the past year, whether to monitor my positions or even to open and close new positions. Of course, I make my technical analysis on my computer, but once I figure out my target zones, I can do the rest on my mobile. The platform is commission-free too, with no fees on deposits or withdrawals, and the only transaction cost that you need to consider is the spread. This fee structure enables me to engage in short-term trading without worrying about the excessive fees. In the past, I would usually avoid small margin trades due to the high volume that I typically trade with, so fees could actually eat up my profits. However, with Ceres Markets, this concern is eliminated. Getting started with them is very straightforward. You can begin with a minimum deposit of just $50, but I would recommend opting for a larger amount to take advantage of their welcome bonus offered on your first deposit. They double the amount that you deposit and you can use that bonus to trade with. I've included the link that you need to sign up in the description below, so be sure to check it out. Don't miss out on this. For instance, if you deposit $1,000, the platform gives you an additional $1,000 for you to use in your trades. There is a maximum bonus limit of 5,000 though, so take that into account. But basically, zero fee trading, zero fee deposits and withdrawals, welcome bonus, high leverage margins, compliant brokerage, and most importantly, stocks, forex, commodities trading against cryptocurrencies. That's really what sets this platform apart from the other exchanges that we use. I dropped all the links that you need to check it out in the description below, so take notice. Now let's switch to the Bitcoin chart. All right, let's begin. First, we're going to start with the shorter term, and then we're going to go into the bigger time frames. This is the 1 hour. As you see, we're actually making this bold breakout on the upside, breakout of this triangle that I was drawing yesterday. I told you that this triangle has a 50-50 chance of breaking on either side. Of course, we were closer to the upper end of the triangle, so it makes sense to break on the upside, but I was waiting for this confirmation. And not only that, but as we broke the first time, as we broke out of this triangle, we came right back into the triangle, meaning that this first one here was a very weak attempt. It was undecided move. The bears were still pushing hard, and we were still at the risk of falling into the lower range of this triangle. Therefore, we had to wait for that confirmation, for that retest here that we had, and now we are confirming that we're actually ready to break on the upside, and we are already doing so. This is on the 1 hour. Of course, we're going to have another pullback again. You can see that we are in the overbought region here in stochastic and simple RSI. In fact, the simple RSI is even closer to the overbought region. So we can expect a minor pullback here, but definitely we are now going up, and this is great for us. This is the 12-hour chart. You can see the bigger time frames, how things are looking. We are really now opening the door to rallying towards the 34,000, which is my first target. Second target, 37, almost 38K. And then 40,000 is the next target that we're going to be challenging in this bull run. I'm actually expecting a blow off top, and most likely we're going to see that once we get into these higher resistance zones. We could actually extend higher than the 40k. We could go perhaps to this previous resistance at 43,000, and we can even go higher to the 45 and the 48,000 resistances. This is 48,000 is really the highest resistance that we have here. So we could extend and get up to there, after which I'm expecting to see a blow off top. Very similar to what we did back in 2019. Let's go back there. This is what happened. We are making a very similar performance right now. So after the long-term bearish trend here of 2018, we finally managed to break above this downwards trending resistance line here. And as we broke out, we actually had a lot of velocity. Very quickly, we actually managed to pump all the way up to, at the time, almost 14,000, 13,800. And then we got that rejection. So we are doing a very similar performance here. We're going first, we had this resistance here that we had to take out. After we took out this resistance, we rallied very quickly. As you can see, we rallied to a previous resistance, and it was this level here at the 8,000. Then we had a minor consolidation, another impulsive push on the upside to a higher resistance that was around this level here. Another previous resistance, and then we had a bit of a correction, after which we pushed to the next one. And you can see up to this resistance level here, we had a very impulsive, very fast move, and then we had that blow off top. So this is a similar performance to what I'm expecting right now. Of course, I'm not expecting exactly the same performance, but I am expecting something similar. And this whole move here, from the breaking out of this resistance towards this blow off top, took around 64 days. So in a couple of months, we actually managed to pump by, let's see, what is that in percentage? 155%. So that was quite a significant move. And we are already in the middle of this move. After we took out this 25,000, we are now making our move towards the higher resistance of 40, maybe even 45,000. If we actually get up to the 50k or 48k, which is what I'm expecting, we're going to be talking about 90 to 100% move from the 25 resistance. Of course, if we look from the start of the year, when we actually already started this rally, we are talking about 182% move. So quite a significant one. But let's focus on what's happening right now. So we broke the 25k. We are now accelerating our way towards the higher resistances of 40 and 48,000. This is really for the next couple of months what I'm expecting. And in fact, I'm expecting this to happen throughout July, because August is generally a quiet month for Bitcoin. August and September, I'm expecting to actually see the correction. So over the next 4 weeks, throughout the month of July, I'm expecting to see this kind of a move. Or maybe we can extend it up to here, but after that, I'm expecting to see us correcting and, correcting quite a bit, possibly coming all the way back to around this support at the 33k. This wouldn't surprise me if we see something like that happening. And if we see that happening, I'm not expecting it actually to happen so quickly. Most likely, it's going to take a little bit longer to come and retrace all the way to around 34k, maybe even 33,000. We can even think of retracing all the way back to 31,000, which is currently a resistance. And very soon we're going to flip this into a support. So these are possible moves here. This is more or less how I'm expecting it to play out. But again, it doesn't really have to be all the way to the 50k. We could just stop around 40,000, or we can extend to around 44,000, and then we can start our retracement, our correction all the way back here, confirming support. Because if these moves are so quick as I'm expecting them, we don't really have time to establish support levels on the way up. So we'll have to come back down, retest levels, and find where is going to be the support really before we can, bounce and continue the next bull rally, which will be even more epic. Now, since we are in the higher time frames, I must say that we can still expect a minor pullback very soon, because you can see here stochastic RSI, overbought region, also simple RSI in the overbought region. Oh, almost not breaking the line here, but as we break this upper line, we are entering the overbought. We are already very close to the overbought region, and this is the 2-day chart. So it is possible that we continue this rally here, perhaps to the 32,000, which is another point of resistance for us based on previous price action. We can see here we actually have a resistance line. So 32,300 is another resistance on the way up. So it is very likely that we actually continue this rally for another few days and hit that resistance here of 32,000, after which making a retracement. So this is also a possibility. Stochastic RSI is in the overbought region on the 2-day chart. Simple RSI is almost there. Almost in the overbought. It is already overbought, but it's not crossed the line, so we're not talking about extremely overbought. So we still have more time for a few more days to continue this rally. Perhaps even during the weekend, because the weekend is low in volume and it's easier to make pumps and dumps as well. But I'm expecting that this pump will probably continue over the weekend, and then it's going to be very important how we open next week. It's possible that we see this retracement here, this correction next week. First, a good push to the 32,000 resistance, and as we get rejected from this resistance, perhaps seeing a bigger pullback. This was not really a pullback here, this was a consolidation, and I really want to see a pullback from us, because we have been here in the overbought region for quite some time. If we look on the daily, you can see overbought region since the 18th, 19th of June. So almost 2 weeks it will be soon. Definitely we can't really stay here for too long. We have to make a decent pullback to drag these moving averages on the downside and open the door for another rally on the upside. They don't, you can see it here, they don't really stay in the overbought region for too long. This is the previous time we were here for quite some time in the overbought region, and of course after that we had that correction here, that pullback. So now that we have been in this overbought region for pretty much the same period, I'm expecting that very soon we're going to see that pullback. Of course, it's not going to be a complete repeat of this, nothing ever is, but it's going to be a similar performance. A rallying, consolidating for some time, and then making a decent pullback, and then coming up again, finding that rejection and a decent pullback. So it could be this. We came up here, we made a small pullback, consolidated for a while. Now we're pushing again. Perhaps we're going to push a little bit higher. Then we're going to find the rejection and we're going to make another pullback. So if you are waiting to be buying Bitcoin, you might be lucky if we see that pullback coming soon. If we actually continue rallying and we go all the way to the 32K, a pullback is most likely going to stop us at this 31,000, which is currently a resistance, and we're going to flip it as a support once we actually break above this level. So if we come to the 32K, a pullback could just take us to around 31K. It doesn't really have to take us all the way back to current prices. So you have to be aware of this and make up your choice how you want to play this market. We can also look at the Bitcoin dominance, because we have to consider what's happening with the altcoins. And the Bitcoin dominance, we have been actually trading within this range for quite some time. We established this as the bottom of our range, and this used to be the top of our range. So we were moving within this range for quite some time, and now we managed to break up from this range. We are now heading towards the 52%. We haven't been there in a very long time. I already talked about this in my previous analysis, so I'm not really going to repeat myself. And we are also reaching now a resistance here at the 52%. So most likely we're going to find a rejection at the 52%, but even if we don't, we can actually go up as 57%, as high as 57%. At this point though, because we have been trending upwards for quite some time, I'm expecting that we are approaching here the end of this move. A rejection from this level, after which a pullback I'm expecting at least to the lower level here. And we could actually continue going upwards. If Bitcoin is really driving the market for the next few months, we can actually see it go even higher. We have the 63% here, which is another resistance for us. And this 62.5%, in fact, is a more realistic zone. This is another important rejection point that we have to keep an eye on. So we can actually rally all the way up to these resistance levels, but at some point around one of these resistances, either the 57 or the 62, is definitely going to act as a rejection point from here. And I'm expecting that at this point, Bitcoin is going to start losing the dominance. The altcoins are going to start picking up, and we're going to have a very strong out season. But it could be soon. It could actually be at the 57, 58%. But if it extends, it's going to take a little longer, and it will go to around the 62%. So this is another thing to consider. Alright guys, well this is everything for today's episode. Thanks for staying until the end of the video. I hope these technical analysis videos are really helping and beneficial to you for your trading, for deciding, what to do in these volatile markets. Hopefully you are already subscribed to this channel. If you're not, what are you waiting for? This content is for free. All of my content is always for free. And make sure to check out the links in the description below, where I drop the links to all of the services that I'm using and that I recommend to you. And while you're here, just pick another one of my videos and I'm gonna see you there.